What's up everybody, Jaspreet Singh here, and it has been an interesting few days this week. We just had the CEO of Wells Fargo, which is the third largest bank in the United States, come out and say that it's essentially guaranteed that the United States is going to enter a recession. On top of that, we just saw a major hedge fund, Melvin Capital, shut their doors on Wall Street. On top of that, we had the previous chairman of the Federal Reserve Bank, Ben Bernanke, say that our current Federal Reserve Bank administration is not doing enough to fight inflation. So what I want to do today is I want to talk about first what the Wells Fargo CEO said regarding this recession, why he says that we're essentially guaranteed to go into a recession. Second, I want to talk about what's going on the banking side. What do banks say about a recession? Because that can give us a lot of insight on what might be coming. Third, I want to talk about the economy, talk about what's going on with companies, talk about why Melvin Capital shut their doors. And the fourth, I want to talk about what you can do. Now, before I get into number one, I just want to say it is evening here in San Diego, and I had just finished up it was my first ever meet and greet. I did not know what to expect. I actually stopped talking about it because I didn't know what to do for this meet and greet. But so many of you showed up. It was amazing. I don't think any of us expected that many of you to show up. It was so beautiful. I was touched to see all of that. And some of you flew in. Some of you drove 7 or 8 hours to come and see me. Thank you so much. I love it. I am going to be sharing some more videos and pictures on my Instagram, Minority Mindset, so make sure you check that out. But I just want to say thank you so much for the love. It was so nice to see all of you. Now, jumping into it. Why did the Wells Fargo CEO say that we are guaranteed to go into a recession? So I took some notes here. He said, quote, "You got the Fed saying that the economy is running too hot and that we need to slow economic growth. Then he said that rates are going to rise, interest rates, and it's going to cause the dynamic of the consumer and businesses to change over a period of time. And so now, because of the Fed's changing monetary policy, because the Fed is going to be raising interest rates, because the Fed is trying to take money out of the economic system to fight inflation, it is going to cause a recession." And he says it's essentially guaranteed. And he says, however, little caveat there, the strength of businesses and consumers will hopefully make the recession short. So essentially what he's saying is that because people are resilient, because we have good products, because people want to continue to consume these products, it should hopefully make the recession not too bad. Now, of course, nobody can predict how bad or how not bad this recession is going to be, but that's what he's saying. So he came up publicly and said, brace yourselves, we're going to enter a recession. Hopefully it won't be too bad. That's what he said. Then the second point that I want to talk about is what banks said. First, let me talk about some of the other big banks, because now we have this growing list of big banks that are saying that you need to prepare for a recession. Wells Fargo is the newest one. Bank of America and Deutsche Bank are the three big banks that have come out publicly and stated that they believe that we're going to enter a recession. You still have JP Morgan and UBS, which say that they're not worried about a recession. They said that we're probably not going to enter a recession, but we have a growing number of banks that are saying that we're going to enter a recession. And the reason why this is important to understand is because banks make money when people spend money. And if you are in a recession, people are spending less money, which means banks make less money. So banks don't want people to be worried about a recession, because if you're worried about a recession, then you're more likely to save money. If you're more likely to save money, then you're not going to be spending money on credit. You're not borrowing money from these banks, so these banks are making less money. So it's very interesting to hear when banks say that you need to prepare for a recession, because that means they're going to be making less money. So that's definitely something you want to pay attention to. The next thing that I want to talk about with banks has to do with Ben Bernanke. So Ben Bernanke was the chairman of the Federal Reserve Bank before the 2008 crash. Now, it's funny because I'm laughing. He says that Jerome Powell is not doing a good enough job to fight inflation. Now, I think most of us can agree that yes, we should be doing more to fight inflation. Inflation is a real problem. We should have noticed this a long time ago. It really doesn't make sense that the Fed couldn't predict. They had no idea that printing $4 or $5 trillion was going to cause some sort of inflation. The fact that the Fed could not see that, yes, I agree. Like, you should have figured that out. But the reason why I say it's funny is because when the 2008 real estate crash happened, Ben Bernanke came out multiple times and he said, you have nothing to worry about with the recession. We're not worried about a recession. And then when people started to get more and more worried about the recession because of a housing market crash, he came out publicly and said, you don't have to worry about subprime lending. It's contained. We're not worried about the real estate market crashing. And then the whole real estate market came down, which brought down almost the entire financial system. So if Ben Bernanke is now criticizing Jerome Powell for his current fight on inflation, that has me a little bit nervous because, I mean, if we saw everything we went through in 2007, 2008, now he's saying that we're not doing a good enough job, something that you want to definitely pay attention to. Because if these people are saying that you need to prepare, you should definitely be preparing, because typically these are the entities that don't want people to ever have to worry, because if you're not worried, then you're going to keep spending and they're going to keep making money. And the last point that I want to make has to do with a former CEO of Goldman Sachs, because he also came out this week and said that you need to be prepared for a recession. And he said that companies and consumers should prepare for it. Let me read my notes. He said that the Fed would have to slow down demand and slow the economy by hiking rates, and quote, is going to involve some pain. So pretty much across the board, you're seeing more and more high officials or people that have had a lot of status coming out saying that you need to be prepared. And the third point that I want to talk about has to do with the economy. So Melvin Capital, I've talked about them before on our channel back when the GameStop short squeeze was happening, because originally when Reddit traders, Wall Street bets, people started pouring into GameStop and that stock started rallying. Well, one of the major hedge funds that was on the verge of going bankruptcy was Melvin Capital, because they were one of the big hedge funds that had a major position to short GameStop. So when that short squeeze happened, Melvin Capital was on the verge of bankruptcy, and then they essentially got bailed out by Wall Street because other hedge funds came in and gave them a ton of money to help them stay solvent. Well, they never really recovered, and they've been making a lot of these kind of risky bets. They're a pretty big hedge fund. I mean, they're managing billions of dollars. They're not the biggest, but they're still a pretty major force on Wall Street. And now, because of all the volatility that we've had on Wall Street, I mean, everybody has seen that, the 1,000-point drops in one day, the massive volatility, all of that has been really hurting Melvin Capital. And they just announced that now they're going to be shutting the doors. They're done. Those billions of dollars, it's gone. So investors have lost a lot of money with them. And that is going to have ripple effects, because not only have people lost money, but people are going to be more cautious, because now you have some of these major hedge funds starting to close their doors. I mean, Melvin Capital is a pretty popular hedge fund. They're not the biggest, but they are a well-known hedge fund. And now on top of that, you have more and more hiring freezes and more layoffs starting to happen. I just made a video talking about this, but the Federal Reserve Bank even proposed that we should have nationwide hiring freezes. Nationwide, essentially don't raise people's wages. This is what the Federal Reserve Bank said, because that's causing more inflation. The increasing of wages of people is causing more inflation. So companies need to have hiring freezes. That way wages don't keep going up, as a way to tame inflation. When the Fed starts saying things like that, that's probably not a good sign, because that shows you that some of their tools to fight inflation aren't working the way that they would expect. I mean, the Fed says that they want to get inflation up to what, 2 to 2.5%. If that's what they want to do, why don't they just do it? They keep saying that they're going to do it in the future. They're going to do it in the future. They want to start reducing the price of their balance sheet, the size of their balance sheet in the future. Why don't you just start doing it? The reason why is because it would create a massive shock in the economy and the stock market. So they just keep kicking the can down the road. And that's why more and more people are starting to get worried. So Melvin Capital is now having to shut their doors. We're seeing layoffs. Netflix just announced layoffs. Carvana recently announced a couple thousand people that they're laying off. Across the tech sector, you have hiring freezes and more layoffs that are coming. So, you know, in terms of the real economy, at the meet and greet yesterday, someone asked me, when is the regular consumer gonna feel that we're in a recession? And I think the reality is, it's right now, because a recession technically is when you have 2 quarters of economic slowdown. That means 6 months. So if a recession goes from January to June, you have 6 months of slowdown. Then the recession would be announced in July. But the official start date for the recession would be in January, the beginning of the year. So you have to have 6 months of slowdown before you're technically in a recession. But after the recession is announced, the start date is 6 months ago when the recession originally started. So you don't know you're technically in a recession until 6 months after you're in the recession. But people are already feeling the effects of it. Just go grocery shopping, go fill up your gas, go try to book a ticket for a vacation. Ticket prices are insane. Everything is becoming so much more expensive, but the thing that's not growing in price as much is wages. And the Fed says that they don't want wages to grow anymore because that's causing more inflation. So this is the issue that we're facing right now in the economy, which brings me to number 4. What do you do? Well, the first thing that I want to say is if you do want an easy way to stay up to date on what's happening in the top finance and business news like this, you can check out Market Briefs. It is a completely free financial newsletter that I created where my team breaks down the top finance and business news, and every morning we send you a breakdown. It's fun, it's witty, it's entertaining. I promise you are going to love reading this newsletter every single morning. I have had so many people tell me that this is the only email that they look forward to reading every morning, and I'm gonna give you a little teaser because we have some big things coming. We're on the verge of hitting 100,000 subscribers, and we're gonna need some of your help, and we're gonna have a massive giveaway coming next week. We're gonna give away cool things like gift cards and even a MacBook Pro. So stay tuned, subscribe to Market Briefs. The link is down in the description below. So the fourth thing that I talk about is what should you do right now? The first thing you have to do, this is gonna become so important right now, is you need to really live below your means. And I know this is very difficult in a time when you have high inflation, but if you really want my opinion, things are gonna get worse before they get better. This inflation problem is not gonna magically just go away. The prices of things are still rising, and interest rates are going to continue going up, which is going to slow down the economy. So we have interest rates that are still very high and an economy that looks like it's slowing down. So you want to be prepared for that. So you want to have some extra cash put aside to protect you and to have some cash to invest. Now, the second thing that I want to mention is anytime you see a market crash, you see a recession, you can either use that to build a lot of wealth, or you can be one of the people that lose a lot of money. Now, what I want you to do is I want you to be educated. That way you can be one of the people that make money, that become more successful through volatility. That means if you are not interested in spending a bunch of time and research investing your money, then just do a dollar cost average system. Every week, you find a few ETFs that give you exposure to the market. Every week, you just put a little bit more money into the market. Whether the market goes up or down, doesn't matter. You just keep investing your money into this fund, these ETFs. That way now over the years, you're just gonna keep accumulating and building your wealth. If you wanna become more active because you enjoy being more active, then you're gonna make a list of companies right now of investments or assets that you wanna own. As they start to go down, that's when you buy. If they go down even further, then you buy even more aggressively. I call it drip investing, where you're buying in phases. You're not just gonna buy at once because nobody can perfectly time the bottom. So you gotta be aware of yourself. How involved do you want to be? Do you want to be passive? Do you want to be active? But the key is you have to be ready to deploy capital, but the only way you can do that is if you have capital. So it's better to prepare now, and when you see opportunity, be ready and look for opportunity. The last thing that I want to say is do not expect this to be like 2020 where you had the V-shaped stock market recovery where the stock market crashed and then 6 months later the stock market recovered. Do not expect that to happen again because the Fed doesn't have the same ability to stimulate the stock market and the economy that they did before, because we were not facing an inflation problem in 2020. We were facing a deflation problem. So the Fed used that as an opportunity to print a whole bunch of money and create a whole bunch of inflation to stimulate the stock market. Right now, we're facing an inflation problem, which means the Fed doesn't have the ability to do that. So stay educated, keep, the emotions calm, but be ready to look for those opportunities. If you enjoyed this video and you want to see why we might be entering a once-in-a-lifetime opportunity to build wealth and what you can do to capitalize on it, I already made a video covering it, and you can watch it by clicking that button right over there. Thank you for watching, and as always, keep hustling. When the 2020 pandemic happened, that was when the stock market and cryptocurrency was the biggest opportunity. Next time,